Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is a fresh week. It's Monday morning, April 19th, 2021. Thank you so much for joining me today. I really appreciate it. We have a lot to cover heading into the new week. We're going to kick it right off. We're going to get right into what the market did specifically on Friday. We're going to start out with the SPY, the Qs, and then two other sector groups that are kind of perking up and giving us some opportunities. They might be a little bit overbought, and I hate to use that term because overbought can remain overbought. But what we're going to talk about today, we're actually going to break down a trade from start to finish. We talk a lot on the in the broadcast about the optimal entry price and the profit target that justifies putting on the trade in the first place, which we call the initial profit target. And we mentioned quite a bit that as you start to chew up what is the acceptable profit on that trade, you have to manage the trade a little bit differently. We're actually going to show you what that looks like today and how that looks on the other side, inside of our boot camp and inside the swing trade program. So we're going to head right over to the charts. We're going to kick it off right away, but first we're actually going to start out with some earnings that are expected today and some big ones later in the week, but we'll start out with what comes out today. So we're going to head right over to the charts and we're going to get into earnings, and then we're going to go straight into looking at the market, okay? So earnings coming out today are scheduled for today, I guess is the right way to say it. We have IBM coming out today. We have Coke, so some classic companies coming out today. UAL as well. UAL is pretty interesting. We actually been watching this where it just keeps consolidating, and you're actually starting to see me say this quite a bit over the last month or so, where price action expanded, it's contracting, and now earnings coming out. This is going to lead to a big move. We actually mentioned last week that something big was coming, and I'm going to show you the SPY in a couple of seconds and how that actually consolidated into what we call a melted candlestick. So UAL, I'm actually looking for this to actually break to the downside. We're going to let it tip its hand first before price actually comes out, and then make our decision. But the way it's setting up, I think it's going to break to the downside. STLD is a stock that just continues to have a really good 2021, and now we're pausing. We're basically stuck between 50 and 52. I have an alert at 52.50 for after earnings today to look at for a new entry up there. PLD is another one, and again, you can see having a pretty back and forth 2021, but a really good pullback. And this was actually really the breakout level we watched at 109, and now it's up around new breakout levels around 113. I'm actually looking for this to pause for 1 or 2 more days after earnings and then look for a play. And Zion Bank. And then speaking of banks, actually, I'm going to get to that in a second. Zion, you can see actually as well consolidating right around the 56 level. So what I'm looking for now, and I'm actually going to come back to the screen. What's interesting now is the SPY on Friday. And again, I hate using this word overbought, but we go to the SPY. It traded, I want to describe it first, and I'm going to show it to you. When a stock opens up, and it doesn't matter if it's a daily candle, weekly, a monthly, it doesn't make a difference. It opens up, and then there's trading above it and trading below it. Sometimes it opens here and just takes off. Sometimes it opens here and just collapses. But more often than not, there's some fluctuation between there, and then it ends up somewhere at the end of the day, the week, and the month, right? Well, if the stock does this, it travels around, it comes back and stops right there, opens and closes at basically the same place. It could be exact, it could be a small body. That's indecision. So let's just use a daily candlestick as an example. That's 6.5 hours worth of trading, and it almost opened and closed in the same place. So that could be called nothing else other than indecision. We call that a melted candle because the body of the candle is very small, so it could have traveled up here, it could have traveled down here, but the distance between the open and close is pretty close. And that represents indecision for that time period that you're watching, which is going to take us right over into the SPY. So if we go over to the SPY right now and we take a look at Friday's price action, that is about as big of an indecision candlestick as you can get. It opened and closed in the same spot. And you can probably zoom this out a little bit more and see this on the 15-minute chart. So if we go over here, and that's the opening price right there. That's the opening price on Friday. That's the closing price on Friday. So this is really where you start to become a better trader, where you dig in a little bit deeper. It was positive by $1.39, but the intraday price action opened and closed in pretty much the same spot. So Friday was indecision in the market. You can see that we're still kind of vertical. If we break this down a little bit more, this longer term hourly chart going back about 5 or 6 days, 1, 2, 3, 4, 5, 6, 7, about 2 weeks, 2.5 weeks. This is still a pretty wide window. In order for this to feel like we have a reversal, we still have to get below the 411 level. So bullish ideas are still valid, but here's what we want to talk about. We are now clearly past the point where the risk is commensurate with the reward. So in other words, what are the odds of earning 3 if you accept the risk right now? It's diminishing based on how many days in a row that the stock has gone up. Now, again, we talked last week about changing tactics and going over to moving averages and following and trailing it up. When it starts to grinding moves can stick around for a long time. We're not seeing that massive volatility. As a matter of fact, if we go to the VIX just keeps collapsing, and there's not as many violent moves that are very tradable, especially from a day trading perspective. So what does that mean? Where is most of the volatility right now? Well, over here, over in Bitcoin and Bitcoin stocks. So right now we're talking about bad news, I guess you would say, for crypto coming out of China. And this is actually what has really been the story for me personally with Bitcoin is regulation, a little bit more of a shift in tone. It's a great story. There's plenty of crypto stocks to trade, which we are actively doing every day, and I'll show you that in a second. But this is really a good thing for crypto. It's still the volatility's here. It's still going to be in play, but this is a good thing. Shifting into credibility, for lack of a better way of putting it, has led to this, and they're actually calling it a crypto flash crash over the weekend. So now we're going to take a look at the chart of crypto on Friday. So we're actually take a look at Bitcoin futures, and we're going to actually take a look at where it is right now and probably see it a little bit cleaner on the hourly chart. So this is where we had the coin IPO. This is very much looking like sell the news, exploded, and now since then and today we're actually having a monster gap down. So how does that affect some of the stocks that are crypto related, which are some of the heavier traded stocks that we've been actually trading in the boot camp? So first, let's actually get this up here. I just want to make sure that everybody knows that this stuff is for educational purposes. So how does that play into some crypto stocks? We're actually going to rattle off a couple of them that have been very active recently. Square being one of them. I'm going to go through them and then we'll take a look at some trades. PayPal. Okay. Mara, which is one that I've been actively trading pretty decently over the last week or so since it made all-time highs. And then Riot. Okay, I specifically want to talk about Mara and Riot because those are the two that a little bit more inexpensive and a little bit bigger crowd can trade them. I'm looking for all of these stocks to pull back a little bit, let the news and the dust settle on the crypto, and then look to be building a position long again. I'm not looking to get involved on this big gap down. We are very much looking like it is a sell the news type of situation. Now other news is coming out. You had the coin IPO. You had all-time highs in Mara just last week, I believe it was, a week and a half ago over here. It was very, very tradable up here. But since then, again, reading between the lines, and this is what separates somebody who's a chart reader from a tape reader, all-time highs, and then in 1, 2, 3, 4, 5, 6, 7, 8, 9 days, 8 out of 9 days closed below the open. So if we're going to say that the SPY is ridiculously strong because 14 out of 15 days, I believe it is now, that closed above the open, Mara is actually showing the complete opposite. So this is really more of a day trader's activity where you can go back and forth intraday. But from a swing trading perspective and a longer term perspective, we actually just had what we call a failed test of the high. And this would have been the short sell area if you happen to be aggressive and you'd be getting paid on that this morning. So there's a couple of different trades that lined up. You had support at the 20, you had support at the 50. Neither one of them held. And now the longer term picture plus the macro picture is rolling over. So I'd be careful. And I plan on being careful with any long positions here going to Square, PayPal, Mara, or Riot, waiting for Bitcoin and the crypto universe to find a little bit more of a bid on the weekly chart. And then I'll start to look to build a little bit longer term position. So what does that take us over to? Now we're going to go over to the bigger picture in the market. The SPY, we just said, indecision candlestick. Same exact thing on Friday in the Qs. However, we did find two pockets of opportunity. Technology stocks, interestingly, paused for 3 days. So we're gonna excuse me. Apple, Facebook, okay. Amazon actually finally got out to a huge breakout level that we've been watching, and Cisco actually pretty interesting. Finally had a bullish gap above that level. Out of all of those, I actually like the bullish gap in Cisco. If it stays up there above 52, 52.50, I'm going to be looking to get long. So the point I'm bringing out about tech stocks is they paused. You kind of lose attention on them, you forget about them, and then they explode again. So keep an eye on them today after that 3-day pause. Mentioning the bank stocks before, out of all of the ones that reported earnings, Goldman Sachs had a really nice spike to the upside, paused, and you can see here actually 2 melted candles, right? So now you know, big pause, indecision. From that indecision usually comes a decent move. So I'm actually looking for Goldman to find a bid again and rally through there. Morgan Stanley and Citigroup did not react great to earnings. Citigroup is still consolidating. So out of any of them, I'm going to be watching Goldman. The other pocket of opportunity that we had is in the XLV. So in healthcare, and you can see the kind of week that it did. Now, these are a little bit overbought, but they're still bullish. So I'm going to show you what I mean by that in a second. Moderna, a really good solid move with at least another $15 to go to the upside. NVAX, so obviously some pandemic related stuff here. Amgen kept popping up on my scanners, and now paused at resistance. So now we have an alert set for Amgen at 258. We're going to be looking for that new entry above 258. And UNH coming out of earnings, actually exploded out of earnings. Again, here's what I want to point out. I want to train your eye. So again, nice big move, right? But then look at this, 3 days of consolidating and then an explosion. So that's what we're looking for in those technology stocks that I mentioned before. Now, here's the thing I want to talk about. We mentioned the SPY before. We're going to talk about Home Depot, and we're going to talk about Lowe's. And I get this question all the time. And this is kind of a lesson right now where you constantly, if you're a regular subscriber to the channel, which, by the way, if you find the videos helpful, definitely click down and subscribe. Give us a thumbs up. I'd really appreciate it. It also lets me know what you like to watch. So we talk about all the time the optimal entry here and the profit target, where we still like this trade. So if you can imagine, you say pick a side, then pick a spot, and that's the optimal entry would be the spot, right? But then you get these stocks that just keep going and going and going and going, and they're clearly a buy, but you don't feel like you feel like you're going to be the last person to buy. It's going to roll over, but you know you want to put on a piece. You want to put on your first part of the trade. So I want to show you what I mean, and this is how we break down the trades for all of the ideas that I talk about specifically as swing trades. I just want to give you a snapshot. I want to give you a mental image of how you could potentially set up your trading game plan every day. And if you want to get mine, you want to get my entries and exits, just click below the video. There's a link down there. So here's what I want to show. I'm going to go back over to the screen, and I want to show this. So this is really one of the most fun parts of trading when you really map the trade out from start to finish. And we just have a couple of examples here, but I'm going to show you the bottom part here is what's the most important part, 2%, 2%, 1%, and the difference between 2%. So let's say 2% of the allocated capital goes to that position, or 1% of the allocated capital. So this is roughly half, right? As a matter of fact, it's exactly half, not roughly half. So this would be a situation where the stock is still in a trading range or looking to break out, or like we're looking at Home Depot and Lowe's, where it's very far extended. And I'll just pull that back up again for visual purposes, where it's extended, but you clearly know the side of the trade. So we have our entries in the trade, and STX actually happened to be a breakout. So we have a buy stop at that level. So there's the entry, the stop loss, the dollar risk on the trade, the initial shares on the trade, the current price at the time of the call out. IPT is our initial profit target, the chart point that we expect past the initial profit target, and then we have a 20% gain on the trade. But more importantly, with all of that combined, the trade, because it was a breakout, it did not have order flow yet heading into the trade as far as the recent days or weeks. We're looking for it to get past that level. We would enter the position with a little bit lower share size, but Visa actually taking out some different levels, and it was a little bit of a different trade. So I think it was kind of fun from a trade management perspective to give you kind of like a behind the scenes way and a professional way to really set up the trade. You have to know your initial optimal entry and your initial risk, but then based on reading the tape and putting all those pieces together, the market, the sector, the industry group, and the stock, and the volume in the stock, you start to put those pieces together and you determine, okay, I like the idea, but maybe it's extended, or I like the idea, but maybe it's got to get through this level first, or I want to put on my first piece. That would be one for me. That would be 1%. Or the stock is showing really good order flow, and it's well bid on the daily, weekly, and monthly chart, and it has room to go. So that would be 2%. So that's just kind of, I wanted to give you a visualization. I wanted to give you like a behind the scenes of how you should be thinking your trades through from entry to exit. And let's face it, that's really where the magic happens. It's not the losses, it's holding the winners and having targets to know what the winning trade needs to look like, okay? I just want to cover one other thing that we mentioned last week, and it is a trade in NEO, actually. A little bit more of an aggressive trade, not a trade that is textbook. So let me just pop on over to the chart here. So you can see what's interesting here is we have this downtrend in NEO. Everything looks bearish. And you can even make a case that this is a descending wedge. But over here on the day that they announced that they had, I believe, 427% year over year higher deliverables, that was kind of sell the news again, and it started to roll over. But we keep mentioning this, in a bull market, which we are obviously in right now, and stocks take out the lows, they tend to not follow through to the downside and reverse, and they catch early short sellers on the wrong side. But again, reading the tape and getting a little bit more deeper, we had big volume come in here, big volume coming here, and bigger volume the last 3 days coming here. And you can see the stock is actually opening up higher, or set to open up higher, with the rest of the market rolling over. So these are how you set the clues of individual stocks that we are early entries relating back to the 1% versus 2% on your ideas. So you can start to see how the trade setup, the trade management all play into each other, and you can get involved in some of these less than ideal trades and let them roll over. If they roll up in your direction, you have your first piece on. If it rolls against you, you recognize that it wasn't an A+ trade, but there was something different kind of going on underneath the hood, and you had a different opportunity to start a new position. One other trade I want to talk about today that was really, really good on Friday, which was Target. Again, you're starting to see a pattern here, explosion, pause, melted candles, another move to the upside, a bunch of melted candles. Now, again, we get this question all the time. Do I get out of a trade that's still moving in my favor but stop moving? And the answer is no. Good trading says there's only two reasons to get out of that trade. Number one is it stops performing. And number two is if it's not performing and you're getting heavier volume but it's not moving, that's usually a change of trend. But if you have another idea to put that capital to work, you can hop over into another idea. But remember what I just said. It would have to be in that trading range and churning heavy volume, and that usually means that going from smart money to weekends, and it's going to reverse. So in this case here, we didn't see that. It paused and now broke out. So Target actually had a nice follow through. Alcoa is another one that we're going to be keeping an eye on today as well. So a lot to talk about, but really kind of fun to watch that position sizing type stuff, because that's really what separates traders who last from traders who just take whatever share size happens to be available in their buying in their trading account at that moment. Really learn to level up your game and think it through, because if you start to think about your trading as a business, it becomes a lot less stressful because you're planning and you're scripting out your success. And that's really where trading is fun. I don't know if there's any other word for it. That's where trading becomes fun. So thank you so much for joining me here today. Keep an eye on some of those tech stocks that paused for a few days last week. Amazon's at a huge breakout level right now. It's been at this level since July of 2020. And some of these healthcare stocks, we should probably be able to get some good day trades out of the ones that explode to the upside today. If the market rolls over today and we start to see a little bit of profit taking, just make sure, especially if you're day trading, you have some intraday parameters where you read the tape if you want to start to get long again. Because don't fight it. If it's going down, leave it alone. Oh, actually, one more chart I wanted to pull up, and that was AMAT. Glad I remembered this before we called it a day. So I'm going to take the volume off of there. So you can see AMAT's actually been pretty strong this year. A really good clean flag. Now, a lot of traders get sloppy here, and they just keep trying to buy while it's going down. But do the smart thing. Just wait for this to end up breaking. This is basically a $10 pullback. So roughly $5, right around 139, which you can see is this cluster of price action. So let it break this multi-day down. It was about 1, 2, 3, 4, 5, 6, 7, about 7 to 8 day downtrend, and then look to get long. Don't look to jump the gun. Let it rally, or at least get above the short term, and then around that 135, 145. Oh wait, 139 area would be my initial profit target. So if we go back to that chart, I'm going to just pull it up one more time so you can take a look at it. When you go out to something like this, you set the trade from start to finish. And that's where trading becomes scripted, and that's where it becomes easy. All right. Leave a comment below the video if you have any questions about anything we talked about today. Those industry groups and sectors we talked about should be in play today. Those crypto stocks are going to be interesting today. It's going to be great to trade if you're an active trader. You just need to be able to make fast decisions. So give us a thumbs up, give us a subscribe if you like the video, and I hope to see you soon. Thanks so much, everybody. Take care.